As the U.S. markets closed for the session on Thursday, October 16, 2025, GitLab Inc. finished the day at a striking $48.27, a significant surge of $4.62, marking a 10.60% gain. Now, on the surface, a double-digit pop like this for a software company sends a clear signal: good news. Most investors, perhaps those casually browsing on their Robinhood app, will see this and immediately assume it was driven by a stellar earnings beat or a major upgrade from a Wall Street analyst. They see a stock that's been trading in a range and assume this is the definitive breakout they've been waiting for. That's the expectation. But the reality of what's happening under the hood with GitLab is far more nuanced and speaks to a fundamental shift in how the largest enterprises are thinking about their core engineering infrastructure in an AI-driven world. This isn't just a one-day sugar rush, it's the market beginning to price in a strategic advantage that has been building quietly, largely unnoticed by the mainstream narrative that pits it as a simple David against the Goliath of Microsoft's GitHub. Let's first address the common ground, the story most people believe about the Tesla stock or Apple stock of the DevOps world. For years, the general consensus on GitLab has been fairly straightforward. It's the open-source darling, the comprehensive all-in-one platform that appeals to startups and enterprises that value flexibility and avoiding vendor lock-in. The prevailing belief, often shaping decisions on online investing platforms, is that GitLab is a solid number two. It's a respectable choice, but ultimately, Microsoft's GitHub, with its massive user base and the power of Azure behind it, owns the mindshare and the market. Investors have tended to view GitLab as a slower, steadier player in a high-growth field, a company with a strong product, but one that would always struggle to truly challenge the incumbent. The expectation has been one of gradual market share gains and a constant battle for enterprise dollars, making it a potentially stable but not explosive part of a Schwab Intelligent Portfolios allocation. This perception has kept the stock pinned down at times, with every positive quarter met with the lingering question of, but can they really compete with Microsoft? This is where the reality of the situation forces a complete reevaluation. That 10.60% jump wasn't just a reaction to a single data point. It's an awakening. The deeper truth is that GitLab's core thesis, that a single, unified platform for the entire software development lifecycle is superior to a collection of disparate, loosely integrated tools, is becoming profoundly more relevant today than it was even 2 years ago. The rise of generative AI in software development has created a new layer of complexity. Now companies don't just need a code repository and a CI/CD pipeline, they need AI-assisted coding, AI-powered security scanning, AI-driven testing, and AI-informed analytics. While competitors are bolting on AI features to their existing products, GitLab is weaving its AI suite, GitLab Duo, into the very fabric of its single platform architecture. This isn't about having one flashy feature like a code completion tool. It's about providing a seamless AI-augmented workflow from the initial idea to production deployment and monitoring. Enterprise clients, the ones signing the seven-figure deals, are beginning to realize that the long-term cost and inefficiency of stitching together 10 different tools from 10 different vendors, each with its own AI component, is a logistical nightmare. GitLab's proposition of a single data model, a single interface, and a single secure AI-powered platform is starting to look less like a convenient alternative and more like a strategic imperative. This is the insight that sophisticated investors using platforms like Interactive Brokers are capitalizing on. Analyzing the recent trading activity provides further clues. A move of this magnitude is rarely fueled by retail investors alone. A look at the trading volume on the day of the spike shows a significant increase over its daily average, suggesting institutional players were moving in with confidence. This wasn't a slow grind up, it was a decisive, high-volume push through key technical resistance levels. This kind of price action often follows a period of quiet accumulation by large funds, the kind of entities that Fidelity Wealth Management caters to. They do their homework for months, building a position, and then a catalyst, perhaps a positive mention in an industry report or a competitor's misstep, triggers a broader market reevaluation. We also have to consider the reaction to the last earnings call. While the headline numbers may have been in line with expectations, management's commentary likely contained forward-looking statements about the adoption of its ultimate tier, which includes the most advanced security and compliance features, and the early-stage monetization of GitLab Duo. Sometimes the market needs a quarter or two to fully digest the implications of a company's strategic direction. This 10% move feels like that delayed realization hitting all at once. It's the market finally catching up to the story the company has been telling. To understand the future, we need to be clear about the present. What exactly is GitLab? It's not just a place to store code, it is a comprehensive DevOps platform delivered as a single application. Think about everything it takes to build and release software: planning features, writing code, managing versions, testing for bugs, scanning for security vulnerability, deploying to the cloud, and monitoring performance. Historically, a company would need a separate tool for each of those steps: Jira for planning, GitHub for code, Jenkins for building, SonarQube for security, etc. GitLab's business model is to replace that entire messy tool chain with one unified product. It operates on an open core model, offering a free version with basic functionality to attract a massive user base of individual developers. It then makes its revenue by selling subscriptions to its paid tiers, Premium and Ultimate, which offer the advanced features that large organizations require for security, compliance, and scale. This is a powerful model because it creates a natural funnel, moving users from the free product to becoming paying customers within large enterprises. For anyone looking for investment help or wanting to invest online, understanding this fundamental product and sales strategy is crucial. Now let's project this into the future, contrasting the old expectations with the new reality. The bull case for GitLab is no longer just about steadily chipping away at GitHub's market share. The new, more potent bull case is that GitLab becomes the indispensable platform for regulated and security-conscious industries, finance, healthcare, government, that cannot afford the risk and complexity of a fragmented multi-vendor toolchain in an AI-driven world. As AI generates more code, the need for integrated automated security scanning and governance becomes exponentially more important. GitLab's ability to provide this within a single platform is a massive differentiator. The key catalyst to watch will be the growth rate of its ultimate tier customers and the average revenue per user. If the company can demonstrate that its AI features are directly driving customers to its most expensive subscription plan, the stock could be fundamentally re-rated by the market. GitLab's big bet is that an all-in-one platform is better than a collection of best-in-class tools. What do you think? Comment below if you prefer a single platform or a mix-and-match approach for your development workflow. This is the core debate that will determine the stock's trajectory. Many Fidelity mutual funds with a tech focus will be watching these adoption metrics closely. Of course, no investment is without risk, and it would be irresponsible to ignore the bear case. The primary risk remains the colossal scale and resources of Microsoft. Microsoft can afford to run GitHub at a loss indefinitely, bundling it with Azure Cloud Services and Microsoft 365 to offer an enterprise package that is incredibly difficult for a standalone company like GitLab to compete with on price. If Microsoft decides to deeply integrate GitHub's AI capabilities across its entire software suite in a way that GitLab cannot match, it could stifle GitLab's growth. Another significant risk is the path to profitability. Like many high-growth software companies, GitLab has historically prioritized revenue growth over net income. In a market that is increasingly skeptical of growth at any cost stories, the company is under pressure to demonstrate a clear and believable path to sustainable free cash flow. Any faltering on that front could send the stock tumble, regardless of its technological advantages. Investors on platforms like SoFi Invest, who are building their own portfolios, must weigh the incredible technological promise against these very real business and competitive risks. In conclusion, the 10.60% surge in GitLab stock is far more than just a good day in the market. It represents a critical inflection point in the company's narrative. The old expectation was of a credible but secondary player in the DevOps space. The emerging reality is that of a company whose core architectural philosophy, a single unified platform, is perfectly aligned with the security and efficiency